This week, we saw the ECB meet and greet onlookers with some unexpected news, a boost for the Chinese economy, and Yellen taking leaves from an old book. I'm joined on the line with Phil McHugh to talk through these changes in the trading week and how he thinks they will affect the markets. Phil, welcome. On Tuesday of this week, China's PMI data was released. The data showed that in June this year, manufacturing expanded in the world's second biggest economy at the fastest pace this year. Do you forecast this boost is here to stay?
Well, yes, I think so. I think the news shows that the Chinese economy is definitely stabilising. And this really comes on the back of re-easing policies that they've introduced. There was a big dip in Chinese growth in the first quarter, so there's a firm commitment really to continue to boost lending to businesses and also SMEs. Firms have also been really helped by receiving tax cuts, which should continue to support growth moving forward. One good major point is we've seen a big boost in new orders from commodity retailers, and this really indicates that the momentum is moving from the sort of factory manufacturing sector into the service sector. So this does bode well. I think there'll still be headwinds, there's a few challenges, but overall I think continued stimulus should support growth in the latter half of this year, so the boost is here to stay.
Janet Yellen suggested this Wednesday that monetary policy faces significant limitations as a tool to promote financial stability. At the International Monetary Fund meeting, Yellen highlighted putting impetus on a macroprudential approach by paying attention to bank capital and liquidity, as well as regulatory pressure to create buffers against failure. Do you think this move, as inspired by former Fed Governor Jeremy Stein, is the right one?
I do. I think it's a very, very prudent move. Really extraordinary monetary policy measures, which we are now involved in, are really only needed because someone was not doing their job properly in the first place, and that's usually politicians and regulators. But monetary policy, has its limits of its ability to help, and this is a point that's been raised by all the major central banks. Interest rates are really a broad brush to influence certain specific parts of the economy. So a macro-prudential approach or policy approach is definitely a better way of looking at things. It's more targeted. It's similar to really the UK policy on the loan-to-value ratios that they've introduced. And also really a regulatory focus needs to really address the potential specific risks that could arise. So it's more of a technical matter and cannot form really a part of a broad political or monetary policy approach. So essentially, monetary policy has its limits, and others need to step in to assist and help and really target those specific risks.
Draghi surprised yesterday at the ECB by changing the frequency of their meetings from once a month to once every 6 weeks as of January 2015. What do you see as the purpose behind this change?
Well, it was a little bit of a surprise from Draghi, given no changes in terms of policy itself. I think the main reason overall is to give the ECB a bit more time to digest economic developments between meetings, and it really should reduce the pressure on the ECB to act. In the months running up to June, there was a lot of pressure to actually do something imminently, and this really was probably weighing on the ECB. The move should also potentially reduce volatility as of course, too many meetings increase that volatility. So the cycle of 6 weeks should definitely ease that. And also it will help introduce, they've also announced the introduction of minutes as well. So the 6-week cycle will be better suited to introduce and publish minutes. And the reason behind that is to increase the transparency, which has been a criticism in the past. So overall, I think those are the main reasons.
Well, that's all we've time for on this week's Weekly Wrap-Up. Phil, thank you for your insights. Have a lovely weekend, but be sure to tune back in to Dukascopy on Monday next week, where Ben Jones looks at the trading week ahead. Goodbye.